everyone, and welcome to Boothy's Bites for April. Of course, we can't do this without the man himself. So, hi Boothy, how are you? How was your Easter break?
Oh, I just told you that. I said it wasn't very good. Jackie and I have been talking about the emotional connection to technology, and sadly on the Thursday before the Easter break, Jackie, my computer wouldn't want to start. Obviously I've been pushing her too hard, and that was it. So she packed up on me. So no shops open on Friday. Having said that, I did manage to go sailing on Saturday and Sunday, which was wonderful. I probably stressed out a little bit about going shopping on the Monday, but I managed to buy myself a new little baby on the Monday. So I'm back in operations right now. But yeah, ready to roll. And tell us about your technology mishap as well, because there's a story there too.
So before we started filming this, I was telling Boothy about my phone. I smashed the screen last night, and then I went to use it for something for work this morning, and I completely forgot. But then when I actually went to use it, I could read through the cracks still. So we were saying that's the meaning of life, right? You got to read through the cracks.
You just got to keep going. Forge ahead, read through the cracks. Nothing's perfect, right? So anyway, but having said that, welcome to, is this the March or April? I think we're kind of wrapping up March, but we're definitely in April now. So autumn's here.
Yeah, it sure is. Anyway, on with the show. So I would love to hear your thoughts on why you think it's better to go to a lending advisor rather than a bank for advice.
Yeah, so the statistics that came out last week from the MFAA, which is our Mortgage Broking Association, and 71.8% of home loans and investment home loans have been written by mortgage brokers. I think it's in the last quarter, which is a huge number, right? And I do feel, that the justification of people reaching out to a lending advisor or a mortgage broker instead of going direct to bank is, this advice that people get from speaking to a professional who's been in industry for a long time, been doing this, providing this service to clients, and also with these relationships, in part has, it's part of that wealth creation journey with that client as well. So, for me, when we're talking about why use a lending advisor or a mortgage broker, it's and not go direct to the bank. Well, really, what you're doing is you're separating the product, which is the bank, and the advice piece. Now, obviously, we need the banks to fulfill, the lending and provide the debt to purchase a property or do what we're doing. But the advice component there is far more important. The way to structure your debt, the extra sort of products and services which are attached to a loan, and how to utilize those features and benefits of a loan are very important as well. Also, mapping out what a long-term plan around debt and property is as well. Obviously, buying a property, you've got this immediate need for some cash, but what are the long-term plans outside of that? And speaking to a professional who can give you that counsel, guidance and advice in accordance with your sort of your whole deal team as well, working with an accountant, working with a financial planner, working with your solicitor as well. Having that advice team, I think, really is invaluable. So 71.8% is a statistic which I'm pretty proud of, so well done mortgage brokers, lending advisors out there for that number. But I think we genuinely do a lot more than just provide a product and loan. So kudos to the industry for where we're at.
Yeah, go us.
Go us.
You.
Woo.
And so what's the latest from the Reserve Bank of Australia?
Yeah, so I think, it's been a bit sort of boring as it were, just over the last few months. We've really had that focus on inflation for quite a while. And it's interesting, I sent that message this morning, from December 2022, we've come down from 8.4% inflation, which was crazy, through that sort of exit out of COVID, down to this sort of 3.4% today. And really, it's taken us this long to reopen many of the sort of the chains of service across the nation, across the globe, to get this inflation down. There's still some bottlenecks around, and things with these products and services. Hence, a bit frustrating that hasn't got back down below the 3% band right now. But certainly momentum is in our favour. So this inflation side of things is really kind of a wait and see. Hence, sort of the boring rhetoric from the Reserve Bank right now. But 3.4% with the momentum with us, I do believe that we will be within this 2 and 3% band that the RBA need us to be in the next sort of quarter. And what that means then is really that the RBA then has the luxury to start thinking about other things which are affecting the economy. And the biggest impact to our economy now is certainly this slowdown in growth. So, when we slow in growth, the way to sort of improve that slightly is to potentially reduce interest rates. Hence, some of the forecast for interest rates is that, we'll see a cash rate cut over the next sort of 6 months as well. So again, it's a wait and see. Interestingly, the interbank markets have changed their interest rates. So they're trading at lower interest rates. So the 1-year government treasury bond is down at sort of 4%, 4.05%, which is actually already captured in that sort of rate cut potentially over the next 6 months as well. So, so the RBA is a little bit boring, but I think now we need to focus on what the other impacting factors on economy are, and growth in particular. And I think that will give us a new indications around, what the RBA does next with interest rates. Yeah. So sorry for the long-winded explanation.
No, I love it. Hopefully we are at that turning point. We're sitting at the lights with that indicator on. That's what it's like right now.
Correct.
About to turn. And so what are some of your favorite lender interest rates at the moment?
Yeah, so good news on that. So we're actually providing a mortgage monitor service for clients. So we've got a lot of clients in our world who potentially aren't looking to refinance, don't really want to change banks, happy with their lender, okay? What I would say is, when's the last time your bank called you to offer you a better interest rate? Our mortgage monitor service offers this. So what we're saying to many of our clients is, let's go back and check in with your existing lender and find out where the benchmark of a better rate should be for you with that lender, and then assess whether it's a good or a bad rate there before we look to sort of refinance. But some of our competitive rates right now, Move Bank in particular, have got an incredibly low variable principal and interest rate at 5.94% for owner occupiers, which is super cheap. We're doing a bit of work with Adelaide Bendigo Bank, and they've got some really good interest rates and offers right now as well. And interestingly, fixed rates, so Move Bank have got a 5.79% with offset, P&I 3-year fix there too. So again, we've got some products which are priced a lot lower than potentially where your rate is today. So again, it's appropriate now to sort of check in, get a health check on your interest rates, fight for a better rate at your existing lender. For investors, I think cash flow budget is important. So resetting interest only repayments on your investment debt, I think that's a good thing to do right now. And interest rate wise there, Bank of Queensland have got a really cool 3-year fixed rate at 6.09. Now, I know forecast interest rates are to go lower, but if you want cash flow certainty on interest only, 6.09 might be a good way to give you that sort of peace of mind for the next couple of years. Outside of that, though, we've got AMP variable interest only at 6.49%, which is a really competitive interest only rate there as well. So a few good options for clients, but I think first and foremost, check in, register for your mortgage monitor. Your lending advisor will review your rates and give you that advice next.
Sounds good. And so I saw that you had Judo Bank in for a chat recently. What do they have on offer?
Part of the mortgage broking role is that we do have access to other types of lending businesses, okay? And also often, we get the opportunity to support small business, larger business, self-employed clients as well. So I know we mainly talk about home loans and investment home loans on here, but the specialization or the skill set of our brokers certainly extends to these services too. Now, when a business is borrowing money for small businesses, typically most lenders like to have like property being a home or commercial property as security for that debt. Uniquely, Judo, which is, I suppose it's a newish bank. They've been around sort of 3-4 years and growing, exponentially. They're a great bank. Their service proposition is to basically provide a credit solution around the going concern or the cash flow of that business. So what that means is that if you don't have equity in property, or your primary asset is this business, the business can actually borrow money utilizing the value of the business and not secured against bricks and mortar, which is great. You still got to demonstrate servicing. You still got to go through that credit conversation with it, and because the bank is taking on a higher risk as well, there is a premium interest rate for these types of loans. But nonetheless, for people who are running businesses out there who are looking to acquire other businesses, they maybe want to do some shareholder lending, get other key staff members involved in equity in the business, alternatively need cash to keep the business afloat through growing pains and things like that. Well, then Judo have got a really compelling offer to support businesses as a standalone, lend against the business, and the interest rates, even though they're a little bit higher, are still very reasonable. You're talking sort of sub around about sort of that 9-10%, which is still cheapish money for a business loan. Anyway, and also a couple of my good friends are over at Judo as well. So they're helping lots of our clients right now. We've got an accountancy business in there, a law firm in there, a real estate business in there. We've got a guy who runs a pub and clubs up in the Northern Territory in there as well. Right now, what else have we got? And he's got a motel as well. And I've got one more, but I forgot. Oh, financial planning. We're doing financial planning acquisitions as well. Lots of our clients or our partners are actually buying books or other businesses to merge into build bigger businesses. And Judo have got a great policy around that financial planning space as well. So anyway, that's my little wrap for Judo. Go Judo.
Go Judo. And so what about your wrap on property? I love your property updates.
Well, it's a bit difficult. So, I mean, the auction rates on the weekend were, the clearance rates were huge. I think it was like 80% clearance rates in Sydney, and the property market is really hot. So we have one of the biggest amount of pre-approvals and largest number of clients I've had since we started Lydian in our book, looking and actively looking to buy property. And I'm sure it's quite frustrating going to open homes, going to auctions and sort of not getting your paddle up. So, I feel that right now there is certainly a bit of an undersupply of property in the marketplace right now. We've talked about those pockets of property as well. So we've got a lot of first home buyers trying to get into that sort of sub $1 million property value as well, making it extremely hot. So yeah, it's a bit of a challenge for many, but pleasingly on the weekend, I think we had 4 or 5 good clients exchanged on new homes, which is wonderful. So, we'll be looking forward to winter for those guys moving in, getting some pictures on Lydian HQ about them, with keys and new homes. So I suppose the message really is, keep trying. Although it might be frustrating, opportunities do pop up, and it's a numbers game, isn't it?
Yes, definitely. And speaking about Lydian HQ, what's the update there?
Well, we have a new person joined us, and he's basically a friend of a friend. So there's a partnership that we've got called Sale Funder, and those guys referred through one of their staff members' brothers, who is aspirationally looking to become a mortgage broker. So Ramon Dallo joined us last month, and he's a lovely young chap. He's starting out on his mortgage broking journey. He's buddying up with Christian in the office here, and learning everything about lending, which is great. So we've kind of got this little A team going on, which is cool. And Ramon's a lovely guy. He comes with a psychology background, so different sort of lens on things. Hopefully he's not judging me right now. But he's a pretty studious guy too, a good team player, and a really nice fit for our Sydney office as well. So, welcome to Ramon. Yeah, a good bloke all round.
Yeah, awesome. And so are we hiring in any cities at the moment, or are we closed for brokers? What's the update there?
That's a really good question. You've been watching some of the posts. Okay, well, so geographically, Lydian, so we've got a partnership with H&R Block, which is quite huge, right? And those guys amazingly have got 400 offices, 700,000 tax returns. It's a crazy number. And we are supporting this mortgage monitor service with H&R Block in this coming tax season. With this sort of impending event, we are looking to bolster up the team. Some of the slots we've got to manage a district, which would be 20 offices, maybe 150 staff in that sort of little district. That would be Perth. We're looking for people over in WA. So anyone over there who's looking to, I suppose, have a boost to their numbers, will then reach out to Lydian, and we can certainly have a chat and connect and talk about those districts that we've got there and openings. Newcastle, just north of Sydney. So we've got a great team up in Newcastle. Jim's the district manager up there, and we're looking to have a person to pop around those Newcastle offices as well and support that. Tasmania, I don't know if anyone was looking for a move down to Tassie as well. Certainly there's a little spot down there. So if you can drive between Launceston and Hobart and support Carol and her team, they're looking for people there as well. And then lastly, Canberra. So our capital city viewers, if you're there and you're a mortgage broker in Canberra, well, then certainly there's an opportunity to speak to us there and have a little patch as well. So selective spots right now in line with the districts that we're currently supporting more remotely than others. But anyway, reach out.
Yeah, awesome. And if you do reach out after watching this video, let us know. We'd love to know. Well, that's everything. Thank you so much, Boothy. Always so much fun jumping on these updates with you. So we'll see you next month. Perfect. The May update.
Yeah, okay. We'll keep reading between the cracks, okay? And enjoy your April. Thanks again, Jackie. I love it. Ciao, ciao.
Thanks. Bye.